Time for the SIBO Exchange Traded Profile, and today I'm joined by the one and only Mr. Dave Mazza of Roundhill Investments. Dave, thanks for coming on the show. Good to see you.
Hey, great to see you. Thanks for having me.
Absolutely. You know, we were got a little preview of one of your funds earlier on in the show because Noel Smith pointed out that Eli Lilly's been crushing it today, a standout winner in the group. You guys have been doing a lot as your funds have gotten. You guys are over $10 billion now across Roundhill's investments. But actually, I think the best performing one in the last couple months is OZEM, your Ozempic themed weight loss. Let's knock that one out real quick as a major winner of the day. What do you think's going on with that?
Yeah, over the last 3 months, the healthcare sector has actually been the best performing sector in the S&P 500. That comes on the heels of healthcare actually having some of its worst returns in history over a rolling basis. And it's been frustrating. Healthcare was supposed to be defensive, and it wasn't really doing anything. But interestingly enough, OZEM and the weight loss stocks, actually under the radar, have actually been excellent performers. And so this is the fund I think most people associate us with some of our AI-related names and our income products. But this is a theme that I think still has some legs to it. There's been actually an increase in M&A activity, a bidding war for one of the companies in OZEM recently. Pfizer came out on the winning end of that. But you're absolutely right. As space, there's a lot of actually fundamental momentum on the earnings side that kind of make it a little bit more bullish than I think people realize.
You know, I kind of thought that the major, thematic sector kind of move right now was the semiconductors, the kind of secular, omitted from the macro, but I guess it's actually weight loss. I mean, we're looking at the chart right now, it's incredible. And it's, not just one or two players. There's obviously some big ones. I think that is an important part of this discussion, though, is it's a pretty concentrated fund, I think, as far as the holdings go. I just pulled it up here right now. Eli Lilly at 18.5%, Novo at 14%. You got some others in the race here, but it is worth pointing out, I think, that about 30% of this comes from two companies.
Yeah, no. So one of the things that we try to do at Roundhill is when we're thinking about themes, particularly kind of nascent or emerging themes, is delivering exposure specifically to them, right? So it's about precision. So in this case, those are actually the only two companies that have direct revenue today from weight loss stocks. There's a lot of other names in the space with great drugs in the pipeline and being developed. But in this particular regard, they get a hefty overweight in the portfolio because of that. And so an investor looking at the space knows they're really getting this kind of cutting edge component of the broader healthcare trade.
Okay, so that's a secular move. It's a notable outperformer. Whenever the market comes under stress and you've got secular sector-based outperformance, it's always worth noting in my mind. I'm looking at your guys' list of funds here to kind of branch it out a little bit. I've talked MAGs for years. Obviously, that's your guys' big stalwart at $4 billion. You're going to obviously see MAGs reflect some of the nature of the semiconductor, the NVIDIA trade, of course. You got chat, too, with the AI secular theme up at $1 billion. And then your funds get into some of the income style of products, QDTE, covered call. You've also got WPay, which is, as I understand, one of the fastest growing funds. Tell me about what you guys are trying to do with this and how you stand out in such a very competitive market right now for options-based income strategies.
Yeah, so let's talk about kind of both of those funds, QDT and then WPay, because they're actually distinct in sort of their approach. So QDT is a covered call strategy focused on sort of on a daily basis selling zero DT options. So it's an incredibly active strategy, takes advantage of sort of some of the inefficiencies in that market, but it provides overnight exposure. So actually over the long run, most returns in the US equity market, whether we're talking S&P, NASDAQ, Russell, what have you, happen in the overnight session. This year, that's actually been the opposite. So it's been a bit of a drag on returns. But it's interesting. This fund actually doesn't kind of cap your upside over a month or quarter. It has that kind of daily trading ability, which we think is really exciting. And investors have too. The WPay fund is actually a fund. And what it does is combine our are single stock weekly pay ETFs into one trade. So an investor doesn't have to choose, do I think Robinhood is going to be an outperformer, Palantir is going to be an outperformer, Strategy, or Costco, which we have. You can get all of that wrapped into one. And so I think what we've seen is investors are still hungry for the potential for weekly income distributions. But what they're actually now beginning to look for is actually getting some diversification from that trade. And weekly pay, the structure is actually unique, where it has slight leverage, 120% amplified exposure on a weekly basis, coupled with those weekly distributions. So an investor can really kind of begin to express a bullish view on a name without one of the drawbacks of a covered call strategy where your upside is capped.
Got it. That's a really important part of it, right? Because a lot of people want, if they're going to be in some of this, hot secular themes or areas, they don't want to give that up, and that's obviously
exactly.
One of the main kind of drawbacks of selling options, obviously selling calls against a position. So that means that you get a little bit more swing too, which means obviously if the underlying goes down, you're going to be a little bit more tied to some of that as well, though.
Yeah, and I'm glad you actually pulled up this page, because we actually put this together.
Yeah, I love this, by the way. More places should do this.
Yeah, to understand sort of the pros and cons, right? Because every ETF manager or fund manager thinks what they're doing is great and the best, but the reality is there's pros and cons to anything in life. And so when someone's choosing a covered call strategy, they kind of need to know what the potential upside is and sort of what the drawbacks are. And yeah, in this case, you have amplified exposure. So in a downtime, you want this to not necessarily perform as well if it didn't have amplified exposure. But for someone looking to own this over the long run, get the benefits of diversification from right now 19 names in the portfolio, then you can still those weekly distributions. That might make a lot of sense to them, again, if they're ultimately bullish on the market.
Okay, got it. Now, in terms of the broad exposure versus the stock specifics and the sector specifics, like you've got the Palantir weekly one here, which is pretty high ranking. You've got the Bitcoin one in here too. Are you finding any, commonality or any signs from kind of how people or which assets people prefer to use this strategy on? Like, for example, like a Bitcoin, part of me thinks that you're there specifically for the volatility. Why dampen it? But there's obviously different goals for every type of investor. So for me, these types of funds for something like a Bitcoin might be more like a advisor, someone who wants to dip their toe. How does that show up kind of on your end of who's buying these things?
Yeah, well, it's interesting. With Bitcoin, you could probably have 100 different flavors of exposure to Bitcoin, because it's such an emerging asset class that some investors are still under allocated to. And to your point, yeah, there's a kind of a wide spectrum of people who probably just want that underlying exposure, whether they're getting through an ETF or buying coins directly. But there is another group of investors who might still own Bitcoin, but also want to get some income off of that. But the drawback is you're going to kind of have a dampened return profile. But that's why I think investors are now really thinking about sort of breaking out the tool, as simple as it is. Kind of what price return expectation do you want to have? What income do you want or not? And then sort of what is the reflection of the total going to be from those two combined? Okay.
Now, when you watch the market and you see the way the market's behaving on some of this stuff, when we think about risks attached to it, I guess one of the things that I've thought about, Dave, is which scenarios will these strategies kind of underperform at the most extreme? And one of them, I guess, would be vol down, price down. It stands out to me as kind of the only scenario in which you might go, oh, I'm not only am I losing the premium that I was hoping I'd be able to get if volatility subsiding, but the underlying is going down. But I just don't really see a scenario where that happens, right? I mean, like MicroStrategy, Bitcoin, the price is going down, but the volatility is going up. So, I mean, I guess it's kind of a case in point scenario where you're going to outperform.
No, but like anything, and I'm glad you actually raised that, things like that can happen. right? Because typically, of course, when price is down, volatility is up, regardless of the asset class. But earlier this year, actually, when there was sort of the market was just consistently trending higher, coupled with just zero volatility, that's also not necessarily great when you're selling volatility and trying to harvest from that. But net, over the long run, that relationship, to your point, of the price is down, volatility up, or in some cases, price is up, volatility up, can happen more often.
Right, and that's kind of, I love that because there's multiple scenarios. There's 4, vol and price, which way they go, and I think you're good in 3 out of 4, essentially.
Yeah.
So those are pretty good odds. All right, so the weekly pay, popular, the income funds, they continue to remain popular. For the big tech, the mags and the chat, I guess we'll get an update next week on NVIDIA. I will say chart-wise, it kind of looks like chat broke down a little bit, but you got the big boy next week, so we'll find out, right?
Yeah. No, I think a lot's going to be, to your point with the earlier guest, a lot is hinging on that. There's really not a lot of catalysts, particularly now with the shutdown behind us, until we see what NVIDIA's got to say next week.
All right, here's the look there at chat, trying to hold on to $60, basically. Kind of looks like maybe some old support. We'll see if we can hold on to it. I think for everyone's sake, we hope that NVIDIA doesn't break down too hard.